Good afternoon, everyone, and welcome, despite the heat wave. My name is Dario Donato. I'm a Mediaset journalist. I've been here multiple times at the Motor Valley Festival. It's always a pleasure because we cannot see that this industry stands still. Quite the opposite. Automotive is one of the more cyclical industries, which is going through a rough patch. So that's why it's interesting to hear how finance might help the industry players to consolidate, especially at a time when Asian markets are also penetrating the Western markets in a substantial way. We have banks, private equity funds, as well as some presentations coming from business leaders. So we shall hear how they look to the finance industry, and also we'll be sharing some interesting statistical data. We'll get a chance at the end to ask some questions because I think that by engaging with each other, we'll get the most out of this event. I will not take too long, but let us start from our startup pitch, which is something new that was all introduced this year. Alberto Carrara is the head of business development of Dacia. Let's give it up for him. Thank you, Alberto, for being with us. I'll turn the microphone over to you, and please tell us what you're about to do or you're already doing in terms of AI and also in terms of private equity. Thank you very much. Good afternoon, Dario. My name is Alberto Carrara. I'm the head of business development at Dacia. Dacia offers AI a platform for finance. We work with private equity funds, asset management, family offices, and advisors. You're probably wondering why we're here, since we are in the midst of automotive representatives. And once again, we'll be talking about AI today too. But I'd like to share with you my take in terms of the traction rate of AI. Week out, week in, I engage with lots of decision makers or fund advisors for AI adoption. So based on my experience and what I hear from the market, it seems to me that finance is ready for AI, and AI, vice versa, is ready for finance. As you know, I used to be a consultant in my previous career. And a lot of the work of an associate manager is to navigate different and diverse data sources and generating documents, which is a part and parcel of the scope of what AI can do better than humans. However, as you can see from this Anthropic survey, then it's still underpenetrated. It's only 28% of tasks that are carried out by AI, talking about those that can be automated. And that's where Dacia fits in. Dacia is a platform, the objective of which is to help both investors and advisors throughout the investment process, from origination to reporting. But how? Well, we are addressing those very problems I mentioned. Sometimes data analysts will have to stay up until 2 a.m. so as to browse through data and documents, putting a lot of things manually together. Whilst Dacia allows you to link all data sources available for the fund, documents, chat messages, CRM, with financial database such as PitchBook, Crunchbase, and company registers within a single platform. And also then keeping track of the client's preferences, the way they prefer doing memos, reporting, and then using the main LLMs ranging from GPT, Claude, and Gemini AI, and then Dacia will start automating all of these tasks. As for our customers, what's actually the end result. As you can see, we work with European, Italian, and US entities. We have a global coverage and we follow them through all the investment process, starting from sourcing, where we can analyze multiple data sources and identify more companies than before, down to deal screening, namely pinpoint a single opportunity, and then data room or company due diligence, browsing hundreds of documents in just a week instead of months, and then also up-to-date reporting and putting together also presentation decks. Let me give you an idea. This is the look and feel our clients find every day. So they have a slide which was designed based on their in-house model, and then there might be a prompt, one or two lines, and then the output, as you can see, is designed based on their format with accurate editable data. Usually I get the question, I mean, Claude, ChatGPT, and Gemini are very powerful. Why can't I use them? Of course you can if you like 80% accurate platform, because the very value of a vertical player in this industry stems from a multiplicity of factors, especially the first one, namely automation, says there, which means you can have access to engineers and consultants who sit next to you around the table and help you to code your most repetitive processes. Of course, you can give ChatGPT to all of your associates, but then if you want to get the utmost impact of AI and then actually reduce working hours, it does help to have a human element. And here we get some testimonials, some evidence. As I said in my previous life, I used to work as a consultant, so I think it's worth having a person in your office, but I do not code, so we need engineers too. So our approach consists of devoting engineer and non-engineer resources, someone who can understand requirements and translate them for engineers, and then coding for things that now take up hours or even days. Some practical examples. We have a customer, and for each opportunity they assessed, they use a score based on 25 KPIs, and they use the Excel spreadsheets. So each asset data, on an average, would take hours, whilst an AI agent knows exactly which data source to use for each type of data, doing that in just 15 minutes. So then if you add another 15 minutes to have a human associate checking on that, because that's important, but we went from 5 to 8 hours to tops 30, 40 minutes. And this has been observed in the field with customers. I'm not just making it up. And then memos for the investment committee. Oftentimes, after days and days of analysis, it's about compiling all the documents together. And there we achieved an 80% drop in preparation time. So once again, an investment committee memo can be generated in about 25 minutes, tops 60 if you add the person checking it. And last but not least, as I said, quarterly updating and reporting. You always get the same slide decks, the same bullet points, where you only need to update figures and comments. Nowadays, will take, say, 20 minutes to update a quarterly report. Our belief is that as AI will then spread in the finance world, every fund, the advisor, every family office will have an AI operating system, which is basically a platform connected to all of their data sources that knows, learns, and improves over time as users use it more and more. And that's exactly what Desia is building. Thank you. We have time for one question. Anyone? I'll ask you a question. Who were the founders? What was the background before they established this startup? I know that you're not at the beginning because you've had a few rounds of funding. Well, the two founders come from this field. The CEO, Raffaele Terrone, was the founder of Scalapay, the first Italian unicorn. But before being a founder, he worked for Barclays, then private equity, for about 10 years. And then the chief product officer, Alessandra Maro, and the chief investment officers used to lead the Advert International AI department. So we're talking about professionals who have a few years experience under their belt. Another question, why are you based in London and not in Italy? Well, because many of our customers are in London, so the bulk of European private equity funds are headquartered in London, but will soon then open an office in Italy too. Thank you very much, Alberto. Paolo, we met last year. Paolo Basso works for Morgan Stanley. First of all, it's a pleasure to have you here, Paolo. You'll be talking about the performance of the automotive industry, possibly starting from a macroeconomic level. What is driving the future, and what can an automotive company do to try and grow? Thank you. The stage is yours. Thank you, Dario. My name is Paolo Basso. I have been working for 28 years in Morgan Stanley. I work in the capital market department. I'm not an industry expert, so please have mercy on me and don't ask me too many industry-specific questions. I would start from our media outlook. Global GDP, United States plus 2% year-on-year, in Europe 0.6%, Japan is lower, UK is 0.8%, with CPI around 3% in the United States. We expect it to rise in Europe too, especially following the war in Iran. It should drop up to 2.2, UK 2.7. And finally, interest rates. In the United States, they are stable at 3.6%. And until 3 months ago, we expected the Fed to remain unchanged, whilst the ECB would cut rates by 50 basis points this year yet. And then following the war in Iran and impact it had on energy costs, we now expect the ECB rises rates by 50 basis points, so 25 basis points in June in about 2 weeks' time, and an additional 25 basis points after summer. Go from 2 to 2.5%, as you can see on the screen, and then take them down back to 2% once, hopefully, then inflation starts declining again in 2027. The landscape, as a result, when compared to 3 or 12 years ago when we last met at this festival, so the landscape is much more compounded, lower economic growth. We have then reviewed all our expectations, especially for Europe, higher inflation, interest rates that stay high or will even be hiked in Europe, as I said. In all of this, I think that the equity and bond market has never been as strong, at least in my memory for the last 20 years. So, in terms of the liquidity we see in the system for both bonds or equity, we are talking about unprecedented levels. I'm sure that you're familiar with S&P 500 and also the other benchmarks are their historical highs. I just checked when we met last year. S&P 500 was 6,000. Now it's up to 7,500, whilst the macroeconomic landscape is more complicated. There is no predictability to oil prices. This predictability, if anything, is growing higher and higher because of the closing of the Strait of Hormuz. And all of this just to say that at the moment there is a mismatch between the economic and the financial landscape. How can that be accounted for? And here I zero back to my initial pitch. So it's accounted for with huge investments in AI. I don't know if you heard this morning, we're talking about 150 billion investment this year. And last year, for AI and everything related to developing new data centers. I mean, last year we predicted that investment in 2026 would amount to 400 billion, so twice as much. Last year we had predicted that to develop computing power over the next few years, as well as data storage capacity based on demand, about 3,000 billion or $3 trillion would be needed over the next 3 years. That was back in 2025. That's what was predicted. Now we expect this capacity investment to take place in the next 3 years. And this is actually driving a number of other industries that have not been affected at first, ranging from utilities, providing power to the data centers, to semiconductors or semis. I don't know if you've been following that sector, but it had a huge boom in the last few months. But the same is true for then earth-moving machinery or then concrete and cement sector. Everything is being driven by this gold rush. That expression was used this morning. As for us in the finance community, we try provide different types of aids and help to boost the financial capacity needed to then support this investment. That's a more or less a current landscape. So compared to last year, there has been an acceleration for certain industries. But the same is true for the economy. I mean, based on the latest quarterly reporting data, then they have been the best in the last 4 years for the upside. So it's not just about AI or tech securities. We are talking about a general recovery applying to multiple industries. Let me now come to the automotive and OEM sector. Here you see the historical series of the automotive industry. So European OEMs compared to Euro Stoxx 600. So it's basically an aggregated view of European equity. In blue, you see OEM. Let me clarify. I don't know if you were here this morning. You heard about Ferrari, Lamborghini, Ducati, Ferrari is the only one listed. Here we're talking about the volume sector, Volkswagen, Stellantis, Renault. So this is actually the worst performing industry in Europe. The worst performance also when compared to European cyclicals, and the same is true when compared to consumer discretionary assets. So the situation for the OEM sector is a challenging one because this sector survives on margins. So the EBIT margin is what equity investors look at. And we're talking about historical lows or troughs for EBIT margins. On a more positive note, this is a cyclical industry. And as such, and we've seen quite a few business cycles, our strategists and our industry analysts are then harboring the hope that a recovery will soon take place. Here you see the OEM performance versus the trucks industry that perform better, auto parts and tires. I wouldn't want to depress you by showing you too many slides. In any case, the drivers for this underperformance were externalities, especially competition from China, that in the volume market has been conquering huge market shares, especially in Europe, and also then a context whereby the cost of commodities, the cost of energies, the cost of raw materials, materials and precious metals, and the cost of logistics are all impacting the industry margins. Here you get a snapshot of the various European OEMs' performance. Unfortunately, Stellantis was hit particularly bad. But you see, there is not a single large European car manufacturer who performed decently in the last 2 years. As for trucks, we have Iveco, which is now experiencing an M&A, so it's a different kettle of fish. But by and large, the trucking industry is performing better than the OEM or car industry. I think this is the best representation of the high correlation between each industry and margins. An equity investor actually takes a look at the industry margin, and based on that, will decide whether to step in based on the predicted performance. And the same is true for the auto parts sector. Let me zero in on the auto parts sector. Compared to the OEM sector, our feeling, based on our observations, that investment were made earlier. So that's why the auto part sector is getting out of this trough of low performance more quickly than the large automakers. We expect that the OEM performance will follow suit, so there should be a recovery for the large car makers. But it remains to be seen whether this search for higher margins will eventually also impact the suppliers sector. That's another snapshot of relative company performance for Stellantis. So these are our expectations for the EBIT margin, the most important KPI. We are at a low. It is expected to bounce back. The first signs are already visible, and it seems that it touched then a low around 2%. We expect it to go up to 6 or even 6.5%. At the moment, we're around 6%, so there are signs of recovery. So on a more positive note, to wrap up, let me tell you that margins are looking up in 2026. And generally speaking, what the industry is doing is actually bearing fruit in terms of higher margins. And I'll stop here. Almost. To conclude, and then, of course, I'm here to take any questions. These figures seem to run counter to what we just saw. So a world driven by techs, greatly accelerating its investment or capex, and just like all industries impacted by this investment, these industries are outperforming. The finance community is indeed supporting these huge investments. In the years spent in Workasad, I cannot recall any single over 30 billion funding deals. And in the last 12 months, Meta then raised something like 90 billion in the market without struggling. The liquidity needed in various forms to support and feed such growth is there. I'd really stop here at this point, unless there are questions for me. Perhaps I've just given an assist to the following speakers who will be asked to find answers. We always look for answers inside ourselves, and they tend to be wrong most of the times. However, I think you're right. In order to be constructive, I think we'll see you all next year. I don't want to close on a very gloomy note. I mean, in terms of finance, be it equity, credit, as well as intermediate forms, what I can say is that we've never seen such a high level of liquidity. It's about finding the right appeal to attract liquidity to this struggling industry. Indeed, the sort of oxymoron we can see now is that then the Western economy is struggling, but then the private economy is actually outperforming, and the same is true for financial markets. And then you're right, there are some industries such as the automotive sector that are undergoing profound changes. I suppose there are some regulatory factors. Are there questions for Paolo Basso? Okay. Just one note before your question. Yesterday, then we rolled out a funding deal for Stellantis in the US for $2.5 billion. They were just a funding or a loan. The demand was actually for $10 billion. We mentioned Stellantis as a case, I mean, they're sticking in a complex industrial situation, but then finally the newly published business plan has given some clear guidelines, and I think the market has bought into it. On your first chart, I've not seen figures about the Chinese economy in terms of treasuries and the actual growth rate of the Chinese economy. Since we're talking of the number one automotive market, still growing, by the way, what's your take? I mean, the growth is at 6.5 and the discount rate is 1.7. I'm not an expert in the Chinese market. There'll certainly be a slowdown in the Chinese market. As you said, is the largest, not just automotive, but manufacturing market worldwide. Our automotive analyst called Adam Jonas, and he's been following Elon Musk for some time. And what he said, the thing that he looks most in a country industry is not so much R&D, even though we know it's important, but rather manufacturing, and especially top-notch manufacturing capacity and capabilities. So to try and address your question, if top-notch manufacturing industry, I think Benedetto Vigna this morning was talking about components or car parts for Ferrari that had at first been sourced in Italy and Europe, but then relocated to China. And if Chinese product is better and cheaper, then that would become an issue. In the EBIT margin growth you show, since we've been talking a lot about software CapEx for car makers, do you think that this has actually made some contribution? Because there have been some then resounding announcements in the past few years. Do you think that this is a driver to raising the EBIT margin growth? Yes. For that industry, it's about a huge capex and far too low margins. And this applies to all large OEM entities. And Stellantis just shared their plan last week. We are seeing a lot of partnership effort with other makers to try and slash these costs because they would be unsustainable for individual car makers. And that applies both to AI-related technology, but also in terms of manufacturing. I mean, the fact of clinching a JV to jointly use then European factories that are currently underused with Chinese would be a good avenue because there needs to be a good and efficient way to slash costs. One final question, a sort of gossip question. I read that for SpaceX listing, there is an economic competition between Morgan Stanley and Goldman Sachs. Fees are going to be exorbitant. Are you sure that you're not going to neglect the other industries? I mean, if there is something I have my lips sealed, is SpaceX. Sorry.
If I'm not wrong, 3 billion fees for everyone. I think it's going to be enough for everyone. So now let's try to understand also the funds, investment banks, how they are looking at the automotive sector, what are the opportunities they see, notwithstanding the framework and the outlook that Paolo Basso has described. It's not one of the best for sure, but for sure there are opportunities. Now we have Roberto Pilotto, Fondo Strategico Italiano, and a round of applause for him. Francesco Moccagatta, Chief Executive Italy for DC Advisory. So welcome on stage, Francesco. I'll take a seat here. Okay, yes, for your slides. Yes, because my turn is after Morgan Stanley, so it's going to be hard. Yes, but you have the Japanese hat, so you have an attitude that is into Asia. So for sure, you're going to give us some very interesting inputs. So Fondo Strategico Italiano, the biggest fund investing in Italy. Yes, we are devoted to Italy for sure. And we have calculated actually that we are maybe the biggest European fund actually focused on one single country. The issue of the last fund is equal to 1.6 billion euros, if I'm not wrong. So you are actually the ones that can tell us the temperature of our country. You also have experiences in previous international funds. Now you are going around the world to try to find investors through your company, of course, for our country. So how is Italy seen all over the world? In my past experience, I was an investor in private equity from London and from Abu Dhabi, precisely. And so in some moments of my career, I've also been that kind of person. And so in the past, it was quite difficult. As an Italian person, I really wanted to defend my country, but it was not that easy because we really had volatility in the private equity world in Italy, but also the perception of the Italian industry was quite different. But in the last few years, we have seen a lot of improvement. And after the COVID pandemic, I have to say that the government has been quite stable, and this is seen in a quite positive way by the US. And recently, I see that the interest for the Italian industry is there, and it is a little bit connected to the fact that Italy is less foreseen as the Cinderella of Europe, and now Italy is more foreseen as one of the stakeholders in Europe that can grow and that has some jewels to offer. And so there is the interest to invest in Italian funds that have some features in sizes, dimensions, and of course also in terms of quality and performances. And I think that the following speakers will also touch this point. So they do perceive this kind of interest coming from the other countries. So 60% of what we have received for the latest fund that we have created comes from foreign countries. And there I include the 3 sovereign funds as well. And so we are talking about quite strategic aspects for our country. Last but not least, I want to say that right now, if we have a look at the global situation, I think that the US are struggling a little bit in attracting capital because the biggest global funds, at least the first 15, 20 global funds, were actually collecting 60% of their money from the market in the previous years. But where do you see the difficulty right now? The perception of volatility related to the US government policies. And so some country like Canada, for example, has huge resources in the pension funds. And so they are actually investing a little bit in Europe and in Asia, no more China, but Americans and also people in North America are no more investing in China. That's one thing to consider. And so this means that Europe must be able to attract this money. And so Italy ranks quite well, I think. And now we see that people are starting once again to talk about sterile growth, not very good performances. So this is something that we need to take into consideration. So I have to say that maybe the statement by the US government that Canada is actually not one of the most important countries to invest in was not that good at that moment. Francesco, are part of a partnership with a Japanese company. And so can you talk about the trades, the actions that you have performed in the last few years? We are talking about the second investing bank in the world after JP Morgan. Sorry, Paolo, for that. It's been 30 years that I've been an expert in M&A in the mid-market area. And so we have never seen so many deals in such a broad range of sectors, including also the mechanical one, the automotive one. We have seen a lot of deals in the last 18 months, plus 80, 90%, I might say. And first of all, because there is this fact that America is actually closing up a little bit. The geopolitical moment is exactly that. But in the last few years, we have seen in Italy, but also in other European countries, a lot of deals that are actually decided by the government. The Golden Power application, for example, involves every sector, from the mozzarella one to the defense sector, and so on. If you deal with, for example, a company that is strategical for different reasons, this is something that is applied to that company. And by this, I include China. If I think about the deals in the automotive sector and also for some components and other car parts, the Chinese buyers were actually more than welcomed in the last few years. And now this option is no more there. Japan is now seen as a strategic partner in the Western world, and Japan is accepted from the geopolitical point of view as an acceptable partner because this country is not hostile. Is that the point? Or maybe it's culturally closer to us. Culturally closer, we cannot say that because we are very, very distant, culturally speaking. We just have a quite common concept of family, and the caring of elderly people is quite common between our two countries. But Japan is also struggling with a low birth rate. And so I think that we have minus 10% in the automotive sector in Japan, even if the hybrid market is very interesting there. 90% of, actually 80% of cars produced by Toyota and Honda are completely hybrid, fully hybrid. And so we have plenty of things to consider, and these are drivers for the Asian market. And then we'll talk about the alternative for China for sure. But in the present moment, Japan is living a golden era, if we can say that. And this is also for the private equity. We have seen a lot of private equity deals. A lot of companies are opening up offices there, but then you need the people to go there for sure. I've been to Japan. My name is Mokagata. Please try to think of Japanese people spelling my name and surname. So this is a moment where we see private equity deals that are quite global in their nature. In Japan, we talk about plus 80%, plus 150%. And there, once again, the geopolitical aspect is crucial, of paramount importance. You'll use the slides later, I guess. So I go back to Roberto. In the private equity sector, what do you actually see there in terms of size and dimension? Because the impression is that we see large funds going quite fast and then smaller funds that are struggling a little bit. Yes, that's absolutely correct, above all in Italy. I'd like to tell you what's going on globally in the private equity sector. First of all, there are huge potentials for new capitals coming from three different sources. One is the defined contribution pension funds that at the moment are for structural reasons and for duration reasons, not that easily invested in alternatives. So when we have the semi-liquid vehicles, for example, there we have the possibility for investors to go out more easily from the exposure to the asset class. And so there they might generate trillions of dollars for the sector. The second aspect is the retail sector, because private equity is quite well known, and now we have the democratization of the private equity. What I mean by that, in order to have an exposure to the private assets, private classes that had historically better performances, even with a certain volatility. So in order to do that, you need to have 1 million euros of savings. Otherwise, it's not possible to enter the fund. But now we are seeing different instruments and tools that allow to get into the retail sector. There we have a potential huge request and demand. And then the third aspect, Asia network individuals. This morning we saw this concept. We saw what's going on in China and also in the other Asian countries. And so a part of that money will for sure be invested in the private sector. So these are the three elements that might drive growth, but also complicate a little bit the situation, because there we see a process of transformation for the private equity. So it gets from an investment class with some returns and risk that gets closer to a different concept of volumes, different infrastructures, and so on. But going back to your question, I wanted to say that this is what's going on globally. But in Italy, we have the country funds that are a problem for many years. The investors actually have moved away from the concept of investing in one single country. And then Italy had a quite a high level of complexity. And above all, we have seen a kind of polarization towards high volume investments for large funds that actually has reduced the interest for small funds. So Italian small funds were actually struggling in collecting money. It's difficult to actually collect 100 million. It's more difficult to collect 100 million than 1 billion sometimes. So this is what I usually say. But there I like to say that the outlook is now changing because, fortunately speaking, the ecosystem of Italian pension funds is now getting more and more open to private capital, and this is compensating for the lack of strong interest by the international investors. But there, in order to reply to your question, Italy is actually now better foreseen and perceived. So I'm waiting for a quite positive international return there and interest. Let's have a look at your chart. Francesco, these are actually, in general, the interesting sectors. So the automotive sector, historically speaking, has been quite positive. Here the focus is on the trading houses because in Japan we have conglomerates with billions of turnovers dealing with everything from beer up to the pressure valves for the oil and gas sector. And so for the first time they are now actually seeing something else. Warren Buffett, for example, a quite estimated investor, has invested in the last 2 years in the 4 major trading houses in Japan. So there is a reason for that, so that's for sure. So they are joining different sectors. Yes, they are diversifying and they spread the risk. And so traditionally speaking, this is a quite Japanese approach to face life, a bottom-up approach. It's quite philosophical. And so this part of these trading houses actually are opening up M&A deals because there are maybe some sub-sectors inside that are quite interesting for the private equity sector. This is something that we have not seen for the last 5 years. According to your hands-on experience, what is the approach of Japanese people, not just for the size of Italian companies, but to the governance of Italian companies? So what is interesting for them? What is their attitude and approach? The first thing that I have done as a new grad was to join a Japanese family and a family coming from the Bergamo province. So this was a mystical experience, I have to say. So they do like our way of being. They like that we have extraordinary engineering, historically speaking. We have created, also thanks to the Modena district, we have been able to create excellencies for the automotive sector. And we are seen in this geopolitical moment quite stable, more stable compared to the US, according to the US president and his mood every day. And there is a quite interesting question that we have. In Italy, we have 7,500 businesses that will in the following 4 or 5 years face a generation shift. So there is for sure a pool for the private equity funds, but also for industrial operators to see that they can actually create important deals. And this is a unique situation for Europe. Yes, it's unique. And I can say that we also consider a different percentage of turnover between 100 million and 1 billion euros turnover. So there is a huge number of businesses that have never worked with the private capital. They have never been listed. And so we are talking about 10% compared to 40% in Europe, compared to Northern Europe. And what is the reason for that? So actually private capital was accepted by the Italian entrepreneurs quite late. So this acceptance was delayed. Italy has always been an overbanked country. So we see an overpresence of banks in Italy, and they have absorbed the demand for new financing. And we also have a cultural problem. But last but not least, it's important to highlight the importance of following the growth of Italian pension funds, because they must be the reference point for the growth of private equity and for its ability to finance business projects in Italy. Because this is the reason why the Nordic capital, the EQT in Europe have become so big, and they can actually finance large, medium and small-sized projects. And this is something non-existing in Italy. And so at the end of the day, some funds have grown under the shadow of some national institutions. So there is no problem if the government changes, for example, or there is no political stability. So we have talked about positive aspects so far. We don't have a lot of time to talk about negative aspects. Yes, but there are 3 points that I think we should take into consideration, because we are really lagging behind compared to our competitors. So the cost of energy, as we said before, honestly speaking, we are actually struggling a lot for that. And then the cost of the employment, labor cost. So also doing due diligence with AI or no AI will just to show you the very high labor cost that we have in Italy. So last but not least, yesterday, our president talked about the point of democracy. We cannot be in a country where we wait 16 to 30 months to have the authorization for the environmental aspects. So these are the points that we should work on as a country. And we should work also taking into consideration our European competitors. Sorry, I'm just checking the timer. I just wanted to say that looking ahead, 3 years' time, so we are talking about automotive sector, and this is a quite difficult sector for the private equity. But are you still focused on this sector? As for the mobility, there are new technologies and new business models that might be interesting, and they for sure are in line with the automotive sector. We'll also think of the defense sector that unfortunately has been developing quite a lot. And so it's quite easy to think that for some parts and components, we will have a dual use that can follow also this direction. So for sure, there are some projects that can be interesting, but the bar is higher for the unpredictability of the situation related to the regulations and also to the technologies. Francesco, let's conclude. You talk about an alternative to China. I have no doubt about it. India, just to share with you some important data. So India has 1.5 million engineers every year. So we are talking about a lot of engineers. And in Politecnico di Milano, students graduating from engineering are roughly equal to 8,000. And so this country has overcome China. The GDP is growing by 7-8%. The automotive sector in the following years will for sure be quite competitive also for China. So thank you very much, Roberto Pilotto and Francesco Moccagazza. Now, let's add new people, so private equity, industry, venture capital. How do they see the automotive sector, the components, the parts? So we'll have our speakers available for questions. Fiorenzo Bellelli, CEO of Tinexta Innovation Hub, welcome. Paolo Pozzi, CEO Agrati Group, so welcome Paolo. So we are talking about the pure industry, Italian excellencies, Fabrizio Medea, Wise Equity, Davide Turco by Indaco, Venture Capital, hi Davide, Andrea Valenti, Senior Advisor Theoricon, so welcome. I hope you all have a mic. If you agree, we have talked a lot about finance, so I'd like to start with manufacturing. Paolo Pozzi, with the industry, with the company that produces, that grows, that gets closer to the Italian excellence, for sure. You are an Italian excellence for fixing systems in the automotive sector in your districts. And you actually have the representation of a very important business that is then brought throughout the world. So we talked about finance. You as a company decided to grow in a quite organical way. Or how is your view of finance? Because you have an excellent hub. When we talk about made in Italy, we talk about companies like yours. So you export your products, you work all over the world, you are well recognized for the quality, and in your niche market, you are one of the best companies, let's say that. Thank you. So quite rapidly, we are a company that is within the cluster you defined before. So we have 700 million euros turnover, and we produce fastening systems. It's better to say that in English because you said bolts, and this is a little bit cheap, so fastening system is more appealing. But actually, we have grown not just organically. In the last few years, we have grown quite a lot, and this is a point we discuss quite often. And then we can maybe talk about the situation after the pandemic. So what issues that this has created also in the psychology of entrepreneurs and the choices that we make, organic growth, or through extraordinary deals. We have done this in the past, for example, through different ways. We had Greenfield in China. We had some acquisitions of companies in Italy. We had also the FSE, a French fund that was created after the Lehman crisis in 2009. So we were able to acquire 4 plants in France. It was actually a very important competitor of us, and so we also had a quite important acquisition in the US in 2016, 2017. And so for sure, we had plenty of experiences. I'd like to say something about India. As for the expectation related to India and compared to China, probably today we see different conditions. But in 2004, 2005, we had the doubt where to invest at that time, whether China or India, because the automotive markets of these two countries were comparable. China was 4.5 million and India was 2.53 million. And we didn't know actually the future at that moment. And now China has a production of 30 million cars per year. A share of it is sold in China. Another share is devoted to exports and India for other limits that are actually beyond some aspects, so related to the number of inhabitants, the possibility also to educate some engineers and STEM qualified people. There we see that these people also come to our country. I don't know what has changed in these years, but I have to say that at that time there were some limits related to maybe to democratic system. And of course, I want to be provocative. So this has led to a quite significant gap that now we see above all for infrastructures between these two countries. And so for sure, this is a problem that we are also experiencing in Europe. And we talked about this also in the different speeches this morning. So what are we doing right now? How many millions per year? How many millions cars per year have your fastening system on? 45 million cars, I have to say, because we produce 40 million components per day, and we supply all OEMs in Europe and in America. And what about this year? Just to have an idea of the market trends as for the orders that you see. From the point of view of the volumes, I have to say that so far this year, it's showing quite good performances. So the first 4 months exceeded the expectations, considering the different context. And above all in Europe, that strangely is the best performing market. So in terms of selling volumes and also production volumes. So in the first 4 months of the year, we see an increase in volumes in the order equal to 5%. So there is hope. Yes, the situation is different for the US. This year, we are still impacted by the Stellantis situation. So everything depends on the mix of customers that you have, the weights that they have. Stellantis, to give you an idea, with the new CEO, the change in the strategy, the reduction in the prices, and the redefinition of a set of priorities for us has been equal to plus 80% compared to April last year. And so you see the importance of the CEO in a company. And for other companies, yes, we have to say that this is actually the market that is more challenging for us. So after the pandemic, the US market has struggled a lot. And so even the tariffs are driving us crazy, because we have actually to spend time and focus on the results. The added value there is close to zero, but it's not minus for sure. So it's important for our financial statements because we are talking about one-digit EBIT margins. And so As journalists, we talk about political uncertainty, and then it's important for us to talk to the owners of the companies to understand really the impact of this geopolitical instability, because this then translates into the different businesses.
Because I'd like to get some questions at the end. Fabrizio Medea, Senior Partner Wise Equity, you have quite a tradition also in motorsports. To date, the same deal as you performed a few years back. Would it be repeatable, a snapshot of niche excellence, motorsports, and in general? Well, first of all, good afternoon, everyone. To address your question, I'd say yes, absolutely. We are a company managing private equity funds. It's about 30 of us. We have been investing in Italian SMEs, and we do some M&As too. Just to give you an idea, we made 46 deals in total. In what period of time? Over 26 years, but those 46 deals then exposed 130 underlying deals. And many of these deals are part of the past. We only have 11 companies in our portfolios. One of the stories is tattoos you referred to. I gave you an affirmative answer because motorsports often epitomize what we call made in Italy. I'm lucky to have then one of the excellent companies next to me. We used to be your suppliers, Galvanic Processing. I mean, Italy consists of niche leading companies. They often have a large global projection of their other product or service. Motorsports is agnostic, no nationalities. I mean, it does not depend on a time zone. So people work in the motorsports just think in terms of races all over the world. They're not based on their nationalities. And if you supply technology to them, you are naturally exposed to the globe. There are two hubs. I mean, first of all, this industrial cluster actually extending into Lombardy, but Italy is definitely a very important player. I mean, the company manufacturing the lights for Le Mans 24-hour race is a company based in Lecco. Nobody knows about them. It's amazing, and they have this amazing technology. And this is part of our group too. In motorsport, you've got to come in first, otherwise it doesn't matter. What I like of this event, and the second year in a row I've been attending, I see that how motorsports will then contaminate and create excellence in the adjacent industries. And there are so many things that motorsports develop as a form of excellence and then can be then replicated on scale elsewhere. And that's a winning recipe. To go back to my answer, we still look to this industry with a great deal of interest. As I said, because you represent excellence in global motorsports and a very dynamic industry to boot. Another reason is that motorsports were not as impacted by these regulatory choices that caused difficulties for the manufacturing industry, as we saw from Mr. Basso's slides. That's not the market. That's just, a scoring into your own goal. That happened because wrong choices were made. Motorsports is quite protected because 95% of that sector is still linked to traditional technologies. For example, in terms of technology innovation, motorsports have many things to cross-contaminate traditional automotive, such as the ability to use special fuels. We are convinced that pure electric driving is not the answer to the future. But then, it's about divergent opinions. It's a question of, just hedging your bets. So we are looking for investment sources. Please speak up because we're more than willing to listen to what people have to offer. We are not venture capitalists, but there are more here because you've got a different business pattern depending on the phase. Whilst we work with companies of a certain size, when we started, then the total was 20 million sales, not 200. So just three companies. I think that now we're talking about 200 million sales figures. When we sold it, it was already up to 90. And that's a great example of how Motor Valley technologies are then excellent examples. So I think your then look should cut across. I mean, they are international because they operate in motorsports. Their technology could cross-fertilize traditional automotive companies. So that's what's important to be here. So Davide Turco, you're next. Since we work with deep tech companies that have been growing in the wake of deep innovation, if it's true, say, at the present moment, the automotive industry is struggling for a number of reasons, is there still space on the market to find some promising bets, such as Easy Range, just to mention one? Thank you for having me. Let me introduce myself. I'm the CEO of Indaco. My company is a venture capitalist investing in startup detects AI and deep science. I'm also the president of the Italian Tech Alliance, so I'm here to represent both subsectors. First of all, let me voice my frustration. Unfortunately, the assets available. I mean, we have been saying that year in and out. No, we just repeat it because we hope that the following year will be better. I mean, in 2025, for venture capital, the United States invested 300 billion. It was 200 the year before. 100 was invested in AI, and now they doubled it, 200. All Europe together invested 6 billion in venture capital, and they allocated, 20 in the UK, London, Cambridge, Oxford, another 20 comes from those advanced European countries such as France, Germany, and Nordics. And the remaining 20 is split into the small ones, including Italy. We account for 1.5 billion, but that's not enough because the challenge is to then turn a startup into a scale-up successfully so, and that applies a lot to the automotive industry, especially in Europe, are not enough. It's not about the lack of ideas. It's about having the right tools for growth. That's what I said. I'm voicing frustration. I don't know why France can invest 7 billion and we only then invest then a quarter of that, even though our GDP is on the same level. And that will also impact the various sectors. The current deal in automotive industry has on an average $1.5 billion in Europe. And that came from the way company where NVIDIA, Microsoft, and Stellantis invested. And where do you think they will be based? It will be based in London. So everything is happening there, not here. So where does the money end up? In many cases, money was invested in EVs. We pursued that strategy. So a lot of money was invested in Northvolt, which unfortunately went bankrupt. And so we burned a lot of ammunition for a wrong choice. So there was a massive investment, wasn't it? Indeed. So that is a clear sign, the fact that we are not actually looking at the landscape and looking for the right solutions for that landscape, as opposed to then capturing bottom-up solutions coming from the market. That's our experience. I mean, Italy is actually doing something. We're happy that we invested in Easy Rain. Can you briefly explain about that? It was initially an idea to then give back some grip to an aquaplaning car. It's an actuator that puts some water in front of the tire so as to regain grip. So basically, you're braking, then the car is then slipping, and then there is a high pressure fluid that is injected in front of the tire so as to recover some grip. It has been demonstrably measured. Together with that, they develop a number of sensors as for the right timing. And I must say this working out quite well because the hardware components to be part of the automotive industry, which is quite time consuming, unfortunately. And now it takes even longer because many of the new capex tends to be put off in time. So that is quite time consuming. Whilst the digital part, all the sensors to identify low grip situations such as rain, mud, and snow is working quite well. Let me be provocative. We do quite a lot of interest stirring up from car manufacturers as well as tier one suppliers elsewhere, not in Europe, unfortunately, other geographies. Luckily, we see a lot of interest coming from Asia and North America too. We are then flogging on, struggling a bit. Let me have a final optimistic note, which is justified by Italy's uh, capability to innovate because we've got great founders, luckily for us. And then there are some good news because of the Competition Act that then drives pension funds to invest a bit more in venture capital. They're talking about 3 billion, which might help fill the gap. Because if you want to bet on autonomous driving, you need to inject a lot of capex. As you know, a spin-off from Milan's Polytechnic is doing exactly that. I think they raised 40 million, but it's 3 times as much in the US. Wave just raised 1.5 billion. Who do you think is going to win the race? If it were up to me, I mean, the name of the company eludes me, but I'm sure you're familiar with that. But the company is headed by a CEO called Luca Foresti, who's one of the fastest decision makers I ever met in my life. So 40 million versus 1.5 billion, who I'm gonna be betting on? I don't know. I'm still constructive enough to think that if you have a fast thinker, such as in this Italian CEO, I don't know. I mean, there is a bit of an imbalance, but who knows? Maybe it's going to beat it. I mean, if you've got exceptional founders with a vision, you can indeed get to a point when you are taken over at a decent price, but you're not going to be a leading company. Next, we have Andrea Valenti, Theoricon. Yours is a relatively new fund, but it seems that your mandate includes the automotive industry, and Formula One seems to be part of DNA. Could you please explain what you do? What's your mission? Thank you. I'm the senior advisor of Theoricon Industrial Fund. And following up who spoke before me, I would like to voice a positive note. It's a rather recent fund. They only raised capital in abroad, even though the management team is Italian. But what's good is that within investment strategy of Theoreticon, Italy is included among the target markets where the fund will invest. And I must say also because of the founder's background, the automotive industry is included. Our take on the industry, we think it is greatly polarized, as Fabrizio said. On the one hand, the automotive market, not just at the global level, as we saw from Morgan Stanley slides, but also in Italy, is experiencing an unprecedented depth of transformation, not just because of the transition to EVs. I think there are some major drivers of change, such an overhaul of the supply chain, distribution models, a new and very powerful competition that came up just in the last 2 years, also in the European markets. So we're actually here in this venue with a fantastic industrial cluster with a lot of success stories. But there is polarization. So there are more traditional component makers that are struggling because as margins are eroded more and more, starting from the EBIT margin, volumes have been equally eroded because of very aggressive competitors, plus the need to invest in capex to be competitive. On the other hand, we see a lot of power, a lot of energy coming from smaller, even tiny companies, as Fabrizio said, but who are outstanding in terms of technology and innovation. And that's what appealed to the fund founder. And that's why they decided to allocate some of the investment in these excellent representatives. And then what is expected from private capital investors? Well, to leverage undebated technology skills from undercapitalized companies that are still struggling to stand up at a global level. So that's why we do think that one of the next important roles for private equity, as Francesco said, so perhaps we started off on the wrong foot a few years back in terms of the private equity. So I think that entrepreneurs should be seen in an industrial path as just then a fund provider. That's why he was talking about overbanked country, because that has been the case until a short time ago. Then at one point you realize that they're not a business partner. I mean, I've worked for 15 years in banks, so then I speak out of experience. And then when things do not go as expected, they no longer act as a partner. What you can expect from private equity entities is to provide these small companies the right tools to act as aggregators, combining potentially complementary companies who potentially have the right technology to stand out globally, because you need a wealth of global clients I mean, if you think was a sales figure, it's quite amazing to think they do serve these huge customers. What is still lacking, I suppose, is the right capital to emerge on a global arena, synergies, economies of scale, then going global, and that's unfortunately still missing. Bellelli. Tinexta was established in 1995, was it? Yes. It has grown. It got listed. Then private equity funds came along. Here's my question. When the private equity funds come to your company in this case, so we are talking about delisting. So what sort of scenarios open up for the founders? Anve and Nextalia bought a whole of Tinexta, also cybersecurity. So on the one hand, you are a digital enabler, subsidized finance group that does a lot of things. The area of my competence accounts for 160. We're present in Italy, France, Spain, and Bulgaria. We employ 900 people. Subsidized finance is not as high. It's now accounts for about 60%. The remainder comes from digitalization, sustainability, and also AI. I mean, the private equity funds have not yet entered our company because then we had a bit of a hitch with the golden power rule. We got a veto from the Italian government, so we had to cage this company in a trust so as to sell it separately. But this has already happened by other Italian businesses. I mean, as a founder, as the CEO, when policymakers come along and said, no, we'll have to apply the golden power rule. You are fundamental for Italy. I mean, it happened to Tinexta that is worth €500 million. It also happened to a much smaller company. So what does the CEO say? I mean, I suppose you need to change your plans. We are still listed, to be honest, because the takeover bid is not yet completed. As I said, the takeover bid was not completed. Unfortunately, then a whole different avenue was opened up. So we think that they will get delisted by the end of the year. So they had an indirect, not yet a direct impact on us. So relatively little change for us. There is still some uncertainty, especially for first line management. Talking about the instruments to fund these companies in addition to venture capital, private equity, there are some funds earmarked by the Italian Ministry over time, such as IPCEA for batteries, there are development agreements, innovation agreements. Is there still some public funding available? Well, you do need a strategic business plan. You need to aim excellent in R&D. You cannot just focus on a single innovation, making a change in a piece of equipment without having a breakthrough innovation. So if you plan well, there is still room. Yesterday, two wonderful projects were approved in the automotive industry. So there is still slack, there is still room, but it's about designing well-defined, innovative and strategic projects that will support the development path of the company for a few years. We were lucky to find a spin-off of Bergamo University for AI, where we have been doing something really interesting, exactly what was mentioned this morning. How much room is left to bring then digital innovation into Italy? Well, there is a lot of room for SMEs. It's about, a cultural barrier that hampers the adoption of these AI instruments, but there's still a room. And then we act both as consultants, popularizers, and also drivers of change. There comes a time when the change process becomes quite disruptive, and then you need to support the businesses along the way, because it's easy to say change, then you've got to provide the gradual support. We can open up to Q&As if you want. Just raise your hands if you have a question to ask or a comment. Paolo Pozzi, let me start from you once again for round two. How can you bring AI into bolts and nuts? Because everybody talks about AI in private equity, the Desia platform, where in a single screen you've got all different data sources. But how can you possibly put AI into bolts and nuts? As we told in this very venue years ago, there is a spin-off that was created in the innovation team. And here you see some then workers such as Walter Mauri. So around 2021 or 2022, at the very beginning of AI, we're talking about then digitalizing our products, which we had already done directly and indirectly, onto our processes. So we invented the so-called TOC bolt, so a smart bolt. It was a fashionable name. We as engineers had picked a much more technical name, whilst a smart ball does ring a bell. Since 95% of our target market is automotive, our idea was to implement in automotive applications. In our opinion, there are a number of car applications that would use such a product because it has a chip on board that allows you to collect some information ranging from information about the assembly load in terms of safety, to a number of other variables that depend on the complexity of the chip. So we can collect information about accelerations, vibrations with accelerometers and temperature, and then combine them. And then we also started the onboarding data analysis. We developed a digital platform, our own proprietary platform. Even though we usually sell only hardware, there we started also delivering services in case the customer is interested in it. We had two problems for cars, miniaturization and costing. The smaller a chip is, the higher they cost. So we just gave it up because car makers want everything, but they don't want to pay for that or to pay the smallest amount. So that was not a given. So we decided to shift on to infrastructure where then size is no longer an issue. And I'm not saying that the cost issue does not exist, but it's easier to justify it. So we decided to develop the solution for infrastructures, bridges, railways, roads. We already have a number of applications that can be found both in Italy and elsewhere. It was about 40 installations on bridges in Chile. Out of curiosity, since the defense is the fastest growing industry, and unfortunately rockets are being manufactured everywhere, do you have a footprint there too? Not with these products. I mean, there are some dual-use products we supply already to other customers who work with the defense world. We work with tracking. I'm not too sure I agree with the recent idea that automotive suppliers could shift onto the defense. Why not? Because these are two very different worlds in size and even more so in terms of volume. We're talking about two magnitudes totally different. The same is true for material and technology. You can't possibly think you'll be exploiting as exactly the same equipment for automotive quality components because aerospace and automotive are two different worlds, and you can't do that in the same plants if you are manufacturing for Leonardo on one hand and Stellantis on the other. Eugenio Razzelli of Tesla. And by the way, Tesla is often seen as a tech security. Indeed, I mean, everybody knows about Tesla, even though Tesla is not considered an automotive brand. Ferrari, same, but for obvious reasons, I will not enter into, as you can well understand, is seen as a luxury brand. I mean, their typical competitor is then Louis Vuitton. I mean, Fabrizio and David, a question for the two of you. I mean, what's the boundary when you go and examine a small Italian companies for then small techs as well as companies, they use technology to do something else? Because it seems to me that technology does permeate everything, including components and pure manufacturing such as bolts and nuts. You're right. We should not consider where one company stands. What matters is that a company masters that technology, because in any industry, this cross contamination of AI may be a sort of value creation, provided you lose sight of your real assets. I mean, every company should ask itself, what do I actually do? And what do I do well? And what do I want to do even better? What do my customers want me to do better? And then percolating down, you start using technology on the one hand to become more efficient, as we saw. So by automating then routine, toiling, low value added tasks. And on the other hand, by collecting more and more data about what my product does, so as to give my customers some insights for developing services or co-engineering. So the more information I collect, and the more I can use it to then identify patterns, the more I can be a high value added business partner. I mean, Fastway, if you keep on asking to reduce it by half a gram, then there will be some cracking after 20,000 then work cycles, and we're aware of that. So if you've got that sort of information to guide your client, you'll be appreciated. This is essential, especially for these niche players. because we tend to introduce these niche companies into larger industrial groups. I mean, these, the latter, are very good at managing processes, dealing with the market, but the technical expertise is becoming more and more poor. So that's why they need then well trained and educated business partners who will take over when their knowledge is lacking. And this is a great opportunity, especially for the people who have today the audience. So technology is not an option because collecting information, being then quite familiar with my product characteristic and trying to project what that product can do for our customers is one of the most intuitive ways to create value. Right, Davide. I know that Desia is headquartered in London, even though it only consists of Italian people. I don't want to argue. I mean, as you said, there is a disparity in capex. Does it mean that we have then neglected jumping on the right bandwagon because of a lack of funds? But also then for the Italian Tech Alliance, it is a way to jump that bandwagon. We need to be constructive as a company, otherwise, I do something else altogether. You need, to distinguish. I mean, we've already lost the AI game. We have not been developing the AI technology. It's been developed by others, but we may become good at implementing it. As Fabrizio said, we're good at customizing it, then standing out. We tend to be faster. I mean, the Orbit did not develop a new technology, but they invested space and logistics, beating others. Or what we heard yesterday, Nuclear, one of our partially controlled companies, announced that they will have a combination pack for Nasdaq listings. The evaluation was $2.4 billion. That is technology being developed in Italy. It could be a nice solution. This morning we're talking about energy. I'm not talking about nuclear fusion, but at least latest generation nuclear energy. I mean, you were complaining about politics, and now you talk about nuclear energy, which is the highest regulated. Then we're talking about a success stories that got listed. Once again, they are headquartered in the UK. For a while, they had relocated to France because that's where there is the mainstream school for nuclear energy. I mean, Macron has some problems they had through for government crisis, so that's why they relocated to London. So we can develop major technologies, but there is an issue with the country. I mean, the nuclear power is quite a case per se. I mean, we're actually surrounded by nuclear power stations. I don't see why we should not develop them too ourselves. And then there is this argument: why are you getting listed? Why do you get the IPO in Nasdaq? I mean, should you try to do that in Milan Stock Exchange? Do you think they're going to be understood? Do you think people understand exactly what you're trying to do? So I think we can develop technology, but what is missing is, for instance, procurement, for large businesses and the whole state. I mean, so basically you said that an ecosystem is not there. Yes, there is a lot of room for improvement also for public procurement because we were to prioritize then the project of SMEs that are trying to grow, but they need to have revenues. So, for instance, giving incentives to large businesses to buy into Italian technology wouldn't be a bad idea. So, I think that Cassa Depositi e Prestiti has been quite active. Let's wrap up with Andrea. You've only been there for 6 months. you conquered Bisazza, which is an Italian luxury brand, not exactly the same as Automotive. Can you please tell us what's in your pipeline? What are you looking at? I don't want you to unveil too much, but just to get an idea of what you're doing. I mean, this is actually a challenging time, but perhaps it might be quite promising for you in private equity. I think all players will agree with me that we are going through not a time of lows, but of then too high multiples. So the time is ripe for then cashing in the capital. I mean, especially for foreign investors, buy and build projects look quite promising. As you mentioned, the idea of starting from a platform and then scale it up by adding new investors working in the same industry. We are actually looking to this sector with a lot of interest. Extraordinary niche markets. We mentioned some of them, such as the ability to develop automotive software or the ability to process composite materials for the automotive, and then the motorsport then segment playing host today, which still offers great opportunities. And I do not totally agree with what Paolo said, because the characteristics of the motorsport sector, because of their need to have highly advanced technology and a very fast market responsiveness, are also fundamental than a training ground to test out this technology in different industries. Private capital with an industrial expertise, such as my fund, can be instrumental in helping businesses to develop and grow. And that's what we will try to do until the end of the year. Thank you. Fiorenzo Bellelli, 1995 was your inception year. I'm talking about the T-Next Innovation Pub. For the next 5 years, what sort of challenges do you actually glimpse? Is there something new on the horizon? Or will it just endeavor to bring AI into Italian businesses? Well, that's exactly the strategy I had thought of. I'll tell you next year if you invite me back. Maybe some wishful thinking? I mean, do you have then a constructive messages? I'm an optimist by nature. I can hear it from your accent. I tend to see opportunities and no challenges. So I believe there are so many things can be done and done well in our industry and elsewhere too. And this is an Italian region where there is people centricity and people are constructive and just want to do more and better. But then we need to cause them to fall in love with our businesses. That is quite a telling final note. Thank you very much.
So, Enrico Dente, where are you? Hi, Enrico. So, I leave you these final minutes. Please tell us what you like to share with us. So today I'll start with the Nomisma study related to Motor Valley, just to share with you some figures of this ecosystem. Since it's not a research study I conducted, it's difficult to talk about figures. created by someone else. So then I'll talk about them, and then we'll see how this translates into what I have been doing for the last few years. This is a research study conducted for Motor Valley by the request of Andrea, because the goal was to understand what is Motor Valley. We usually see actually the six brands that we all know: Ducati, Lamborghini, Ferrari, Pagani, Dallara, and Maserati. But underneath these six brands, we actually see the biggest value that we can generate. So this research study is quite innovative because it is not just based on the Ateco Codex, because this is quite limiting, because the Motor Valley output is not just related to purely automotive producers. We also have other categories that are not classified as automotive but are within the supply chain, or they are strictly related to the brands. This morning we talked about the experiences, so the fact that these brands take to the manufacturing places, some people related to the tourism, because these people will then spend within the food and wine supply chain, and also the hotel chains. So we have used the Markov algorithm that allows semantic searches and searches by algorithms. So there we see some companies, some turnovers, and also players of this sector that are actually related to it, but that have never been highlighted. So you see some figures. So the six main brands that generate roughly 12 billion euros in turnover. Let's think about the huge amount of this number if we compare it with the automotive sector in Italy. We can get to 2,944 companies that are suppliers, direct suppliers for the manufacturing part, up to 9,000 companies related to the manufacturing aspect, and up to 39,000 businesses if we include all the other services related to the supply chain. So you see that the numbers we are referring to are actually very different. So it's important to focus our attention on them and to value them correctly according to the initiatives that we can create for the Motor Valley. And so these companies are different because they have quite interesting features. So here you see some figures related to the research study by comparing Motor Valley suppliers to average numbers of the automotive sector and the manufacturer sector. So let's start from the first part. So internationalization, we talk about export, and you see some bars that actually do not reflect exactly the percentages that you see in numbers. So a direct supplier for the Motor Valley means the closer I am to the manufacturer, the more probability I have to be quite active in the export as a company. If I'm within the supply chain, I'm above the average. If I'm in the national automotive supply chain, I have a good percentage of exports, but the probability is lower. And I see this also if I take into consideration the Margo index, the platform I referred to, that has a rating from 1 to 5 for each company according to the internationalization level. So you see 1.2 for the Motor Valley companies, and the average is 3.2. As for the economic performance, here we're just talking about Controvento companies. So Controvento is a ranking of national excellencies. So we are comparing Motor Valley not just with the average manufacturing sector, but we are comparing it to the excellence manufacturers of this sector. And we see that the direct supplier for Motor Valley has important margins and higher revenues compared to the average of the excellencies. So we are talking about an excellence in the excellence. And it's difficult to really understand and extract a cause-effect relationship, but if we use different data, we can combine this phenomenon to something. So if I supply a Motor Valley producer, I have to respect quite high standards to be cutting edge. And as a consequence, I'm one of the best in the world. for what I do. If I produce fastening systems, if I prepare chassis, for example, if I use fastening systems for tires, if I produce these products for the Motor Valley, I'm one of the best in the world in terms of manufacturing. This morning we talked about Italian and Chinese suppliers. If I'm an Italian supplier for the Motor Valley, I'm not just comparing myself to the national and regional ones, I'm competing with the world. So if I'm selected, it means that I'm one of the best in the world. And for sure, I can get to these figures and numbers, not just because of my collaboration with Motor Valley, because we saw 300 billion euros turnover. So if I'm the best in fastening systems for the Motor Valley players, I'm one of the best in the world. So I can go to other markets such as the maritime, the defense sector. We talked about infrastructures before, aerospace, and there I can leverage my competence and my expertise in order to grow and to become a more valuable company. And so there is a continuous virtuous stimulus within the Motor Valley. So manufacturers continuously challenge suppliers, but suppliers are excellencies and they are not completely passive. They can offer stimuli with innovation coming bottom up. And this is a very virtuous cycle that we can just see in such an ecosystem like this one. So here I'm done with the part related to the research study and to the figures, but the inputs that I wanted to share with you, this is a personal one, and I'm very happy to discuss about it, is that here we see an opportunity. So the comparison that we can make, since we are players in the venture capital and startup world, is with the Silicon Valley because of the name Motor Valley, Silicon Valley, so they are quite similar, but also for the ambition. So I wondered, maybe 100 years ago, the most important companies that were very well known, but nowadays they are no more famous. So I think that we should continue creating excellences. And so how can we do that? We can do that starting from what we have in order to value what we have and get to new excellences. So the Silicon Valley model is very successful. It's been successful for decades, but it's a mistake to try to replicate it. Silicon Valley is Silicon Valley because it is unique. You cannot replicate the model. And the same is for the Motor Valley. I don't think that in another place in the world, if people try to replicate the ecosystem that we have here, they would be successful. And so I think that considering the hardware part, manufacturing aspects, precision mechanics, and also other technologies that are still there and existing, we do have the potential to become an ecosystem of reference in Italy for sure, in Europe, but also in the world for deep tech. Deep tech, I'd like to share with you a definition, is a set of companies that actually develop a product or a service where the technical risk is higher than the market risk. So we're talking about cutting edge technologies. There is the need to carry out a lot of research and then to use specific technologies. In the Motor Valley ecosystem, we have plenty of elements like the four that President Pontermoli talked about, like the pillars. Tourism is lacking here. So for startup, tourism is another opportunity compared to deep tech. And we have key elements here for a value ecosystem in order to generate new excellences. So density of talent. Munir is one example of that. Capital is there, and then you'll see that this gives us the opportunity to grow and to have more capital available. Then relationships. We saw this with 6 CEOs on the stage, and we'll see this even tomorrow. So it's not just a fact of delivering a speech, but it's the point is to network, to create relationships. And then we have the importance of the important aspect of having companies working in the sports world, but also in other sectors that are early adopters for new technologies. As for the motorsports, here you see some numbers related to the training, for example. This is not my cup of tea. Here you have some figures. So thousands of students with some motor valley skills. Some of them come from the Muner, from different study fields. And so the Muner has been able to combine not just businesses, but also universities in Emilia-Romagna region, because these universities teach to the students what businesses are looking for, and the university is able to create connections between the students and also companies and up to the professional training. It's important for us to understand, if you manage capital, to understand how can I have a part of these PhD students, master students, to be willing to create new excellences. And I think that this is a very important stimulus that is really useful so that we can create new opportunities. And as I was saying before, early adopters. It's useful for those who manage capital to see the creation of technologies. If I found a startup and I have innovative technologies, if I look for capital, people would like to know who paid you to adopt the technology. So do you have a tracking of that? Have you already tried the technology? So motorsports to me is the perfect example. So racing cars, for example, I'm not an expert, but they are very important prototypes on wheels. They keep evolving with new models of technologies. For example, if I use the same technology on a utility car or on a rocket for the space, I'm sure the adoption time will be longer and longer. So for sure, this is the perfect platform to try the technologies. And then we also have aerospace for Emilia-Romagna region, because this industry is growing quite a lot. And so motorsports and automotive really have interesting opportunities here. And we are in the seat of the Motor Valley accelerators. You'll be able to meet a part of our team. And in the last few years, we have received 20 million euros with the Cassa Depositi, Venture Capital, Unicrediti, Fondazione di Modena, and Drag and Play. And all this is a program supported by different companies, Grati, Steel Microelectronic, Gruppo Era, and others, because the companies we have invested these 20 million were selected together with the companies representing the market. 20 millions is not that much, but it's a good starting point. The target is to have more money for the next few years and to be smart money, not just passive investors, but investors that can find new clients, new opportunities to grow. So we have seen the fundamentals, and then there are some elements that I think need further evolution in order to achieve more mature ecosystems without damaging them. So the risk culture, the appetite is something we should work on. So we are actually quite accustomed to have always the same job. We really need to find the excellencies and to have the willingness to become entrepreneurs, not just as a B plan, but to have it as the primary option. And then the liquidity market. Those that invest in startups then would like to get out of it. So this doesn't mean that I have to sell the startup, that I have to list the startup. This is quite rare in Europe. But a secondary market, quite liquid, can be helpful to foster more investment and the confidence of investors. Knowledge circularity, you see, is the key for more mature ecosystem. So the giving back. So founders that made it, and then they come back to the ecosystem to be the mentors and to share their stories of success in order to create new opportunities to inspire people. So I hope that this will can start turning. And then we need service layers. So we need people that know the industry, because a general lawyer, a general engineer maybe are not the perfect players to manage venture capital deals. So we need service layers in order to support this growth. I'd like to conclude by saying the deep tech is a huge opportunity. Europe has realized that some funds in Italy and in Europe have been collecting some money in order to invest in this sector. And I think we have the opportunity to become a point of reference also at the global level. So the next panel will be talking about startup and venture capitals. So after my speech, you'll have this. And so if you're interested in this topic as businesses or as founders from different point of views, I kindly invite you to stay with us for the next panel. If you'd like to have some details, contact details, as for the research study, you can talk to Professor Lucio Poma, that has actually carried out the research study. He'll be able to offer you some clarifications and further details. As for the Motor Valley Accelerator and the Venture Capital Point, I can be your point of reference, and then I'll for sure indicate you the right direction to follow. Thank you very much. And I leave the floor to you. You have already introduced the next panel. Thank you very much for your attention. Let's go to business angels and venture capital, the next panel.